Hello, and welcome to Portfolio Matters. In today's share talk, we will be updating our presentation on Tekmar, which was our very first share talk. And frankly, so far, the performance has been rather disappointing, but I have looked further into it and I remain very positive about this company. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. So please, Keith, update us on Tekmar.
Thank you, Richard. Okay, Tekmar is a conglomerate of companies which specialize in services for the offshore, originally oil field services, and now wind sectors. So it provides cable protection services, systems, and also engineering, consultancy. Also does bespoke engineering for the offshore oil sector. And its share price is currently about 65p. When we covered it previously in, I think, January of this year, its share price was about 68p, I believe. So the share price has gone absolutely nowhere over that period. But we were very positive about the company, and I have a decent holding in my portfolio. And so I have looked at it further, and having looked at it further, I remain very positive about the company. So its market cap is about 33 million. It's got net cash, so no debt, and an enterprise value of, well, that should be 33 million. But anyway. Okay, so in summary, this is a turnaround story. The shares are depressed. In 2020, they had 2 profits warnings, and the shares, if they are to recover just to their level in February 2020 prior to the profit warnings, then we're talking about 150% return on the shares. And Tekmar is increasingly exposed to the offshore wind market, which is growing strongly. It has, I believe, a good competitive position, although people elsewhere explaining the underperformance of the shares are saying that there's increased competition and they're worried about margins. Now, we will have a look at some of the competitors, and I think Tekmar is in a decent competitive position. But before we get into it, let's have a look at the offshore wind market, because Tekmar just produce are relatively small components of the cost of a wind farm. So they do cable protection systems and subsea protection systems like anti-scour mattings. So the question really I wanted to ask was, what proportion of the cost of an offshore wind farm do Tekmar provide? So how much does it cost to develop a 1 gigawatt? So these numbers for a 1 gigawatt offshore wind farm. Answer, 2.4 billion sterling, a lot. And it's quite interesting the way that the costs break down. So there are project management and development costs are about 120 million. And as part of that, there are all these environmental services you need to do. So you need to do a seabed environmental survey to see what sea life you're disturbing at the bottom of the ocean, a fish and shellfish survey, a bird ornithological environment survey, marine mammal survey, onshore environment survey, human impact study. All that adds up to about 4 million and a lot of bureaucracy. Then there's the resource and met-ocean assessment, where you work out how the winds and currents are moving, and that is critical in determining where you're going to put your turbines. The geographical and hydrographical surveys, they show how deep the ocean bed is and where you're going to put your cables and your turbines. And then each turbine costs about 10 million, and you're going to need 100 of them for a 1 gigawatt wind farm. Now, the data source I provided only provided figures for certain components. So you see they're saying that cost of a wind turbine is 10 million, but if you break down the costs they're provided, it only adds up to about 6.6, and they exclude things such as installation, commissioning, assembly, and warranties. But the biggest cost is the nacelle, which includes the generator, gearbox, bearings, control system, etc. Then there are blades at 1.9 and the tower at 700k. Then you have the rest at 600 million, and the rest includes some Tekmar bits. So the cables are 170 million, a lot. The main export cable is 120 million. Then there's the array, and that connects the export cable to each individual turbine. That's 35 million. And then cable protection, 2 million. So you have to develop a lot of 1 gigawatt wind farms to provide a decent amount of revenue per annum. Then the foundations depend on, cost of foundations depends on how deep the turbines are. At 30 meters, it's 280 million for 100 turbines. At 40 meters, it's 350. And you can have 2 different types of foundation: a monopile, which is here, so a single pile into the ground, or a jacket. And I don't know what the relative benefits of the two are, but jackets are more expensive. They're more than twice the price. The transition piece connects the pile to the turbine and is quite expensive, actually. Then scour protection is another Tekmar technology, and that's 10 million. So that is much more than cable protection, but still a tiny portion of the overall cost of the wind farm. You then have the electrical substation, 120 million, onshore substation, 30 million. Cost of installation is 650. And when you add all that up, 2.4 billion. But sadly, Tekmar's bits, really not very much. The cable protection system is less than 0.1%. The anti-scour protection system is 0.4%. And we will elaborate on what exactly that is in a minute. Okay, so moving on to Tekmar itself, this is the recent share price history. It used to concentrate in the oil and gas sector, and so this sell-off here is largely related to the fall in oil prices starting in late 2018. A new CEO was appointed in 2018. So more recently, in 2020, there was a heavy fall in the share price in February when they announced that they were suffering from supply chain disruptions due to the closure of China, from which they were outsourcing a lot of their bits. And then they had to get substitute production from Italy at a higher cost. And then the share price fell further in October 2020 when they downgraded revenues by 10%. Now, frankly, I'm surprised at the share fall there, because given the disruptions we all know about due to COVID-19, I would have thought that the market would have been anticipating revenue declines. But anyway, since then, the share price has recovered somewhat from the lows, but is still a long way down from its pre-COVID levels. And Tekmar is repositioning itself to service a growing industry, the offshore wind sector. But it has various different segments. So Ryder Geotechnical does design and analysis for oil and offshore wind. Agile Tech does engineering analysis and software design. Subsea Innovation builds bespoke equipment for pipelines and stuff. And we'll see, I think, one of their pipeline connectors. Tekmar Energy does subsea protection technology, and Pipe Shield, which they acquired in 2019, does subsea stability and protection. Tekmar China services the Chinese offshore wind with subsea protection technology, and you'll see they have been winning contracts. This is from one of their presentations, and this is all the stuff they do. And this shows, all the additional pieces you need for an offshore wind farm. And so down here, this is a cable protection system, and it stops the cable rubbing and being frayed by running over other pieces on the ocean floor. And this is a concrete mattress, and this is a frond mattress. Now, what is a frond mattress, we ask ourselves? Well, scouring is what happens when currents, ocean currents, remove sand from the foundations of one of your turbines, and that obviously weakens it. And an anti-scour frond mattress stops that happening. Okay, so this is how the various parts of Tekmar can work together on a project. So this was for a 12 megawatt coastal offshore wind farm in Virginia, US East Coast. And so Ryder did a cable burial assessment, and then Tekmar provided the cable protection systems. Agile Tech did the product design verification analysis, whatever that is, and then Pipe Shield did the concrete matting, such as this, the anti-scour matting. This is the anti-scour mattresses. So they look pretty low tech. Now, we believe these are pipeline collectors. Not sure, but anyway, these are from Subsea Innovation, and this sort of bespoke engineering pieces they manufacture. Now, historically, the company was offshore oil and gas, but it's been moving towards offshore wind. Actually, if we look at 2018, it was already 84% offshore wind. But anyway, currently they're forecasting H1 2021, 66% offshore wind, but the oil and gas sector should be also recovering strongly with the rising oil price. You see that subsea protection is 55%, subsea innovation 18%, Pipe Shield, the stability is 21%, Agile Tech, which is the software engineering analysis, is only 6%. All of this is going to be slightly out of date already because Tekmar have a news feed and they have a Twitter feed, and we will have a look at some of their actual order flow. But this is what they were forecasting back in 2020, when they were forecasting H1 order intake of only 15.2 million. Now, I strongly hope they're going to beat that based on the deal flow that they have been announcing. And you can see that that is well down on H1 2020. Now, one of the big concerns we had in our original presentation was the margins. If you look down here, in 2016, margins were 38%, 2017, 41%, 18, 41%, 19, 35%, so declining. And then in 2020, they were 30%. So that is not a very nice trend, declining margins. Now, why were margins down so heavily in 2020? Well, there was 1 month of supply chain disruption from China, and with Tekmar then having to find higher cost substitute production from Italy at short notice. They're also saying that margins at Subsea Innovation were lower because the weighting of their work was more towards build projects, which have lower margins, than design projects, which have higher margins. But there was also an increase in other expenses here, which is unexplained. Now, they did buy Pipe Shield during the year, and that may be related to integration and restructuring. The reason we are keen on Tekmar is because it is exposed to the clean energy revolution. And what this chart shows is total wind farms currently in operation are 28.9 gigawatts, but got 33 gigawatts in development ongoing. So you're just looking at developments in the process of commissioning is the size of everything that's been commissioned up to this date, and planned is 5 times bigger than what's ongoing. So this is a massively growing market, hopefully, if you believe the forecasts. However, there is a contradiction between the last chart, which seems to suggest very strong growth for the offshore wind sector, and this chart here, which shows the outlook for subsea cables. If the overall offshore wind market was growing so strongly, then shouldn't this also be growing very strongly? But it frankly doesn't seem to be. We're 2021 here, and really it's showing actually not that much growth. It does say planned, so there's a contradiction there. And these are some of the planned capacity builds around the world, and Tekmar have a subsidiary in China, particularly aimed at the Chinese market, and they have been winning contracts. So China's 30 gigawatts, United States 27 gigawatts, so that's enormous actually. And then Japan 8.5, South Korea 8.1, France 8, Taiwan 9. So this is a global market, and Tekmar are selling all around the world. They are also developing systems for the floating wind market. The floating wind will require even more cabling, apparently. Now, this is slightly tangential, but this is a story about what happens when the export cable fails. And so this is a review in 2017 by the UK Offshore Wind Board, which reviewed 7 failures of the high voltage export cables. And they stated that in each one cost around 23 million to repair and in lost production costs. Now, so the cost of a cable protection system is really very low compared to the cost of the failure of a cable. So frankly, adding a cable protection system is a bit of a no-brainer for in the development of an offshore wind farm. And these are all deals announced on the Tekmar Twitter feed, which I'd urge anyone interested to have a look at. Now, some of these deals are very small, and Tekmar have both a group news section on their website, which seems to just announce bigger deals, and the Twitter feed, which announces all the deals, including the small ones. Although, frankly, I noticed they haven't announced their latest deal. So I wonder whether they've kind of forgotten about the Twitter feed, actually. With things such as the drop bags in Trinidad, that's not going to be a big deal, frankly. But on the 14th, so it is today the 19th, so this last week, they announced their third cable protection system contract in China in as many months. So Tekmar China is doing all right. And I have had a look at their competitors. So the same website that detailed the costs of developing an offshore wind farm also contained a sector on cable protection systems. And they listed 4 competitors. So Teram only do onshore systems, so they're not a competitor. Voss Product are a direct competitor. Blue Ocean are privately held and there's not much information on them, but they are a competitor, but they don't seem to offer the range of products that Tekmar do. And Trelleborg only do cable entry systems, and they are not a competitor. So if we then go onto the Voss Product website, they have a group news section, and in that group news section, they have only announced 1 new contract this year. In fact, their news section is really very sparsely populated indeed. So there are 6 items, and of those 6 items, they go back to June 2019, and they've only got 3 contracts on there. The last contract, 3rd of March 2021, the Kaskazi project. VPI are pleased to announce that our products and expertise will be used for RWE, so that's the big German utility, their offshore wind farm Kaskazi. Remember that name. Over the same period, Tekmar have announced 9 deals, and noticeably, one of them is Kaskazi, where they're providing the cable protection system. So all that says to me that Tekmar have a decent competitive position. Now, we, of course, assuming here that both Voss Product and Tekmar are equally assiduous in updating their group news sections, but I can't see why they wouldn't be. And what is certainly true is that in the one deal that Voss Product have announced, the Kaskazi project, Tekmar providing the cable protection systems. So I think Tekmar have got a decent competitive position, frankly. This is the board of directors. New CEO, Alistair McDonald, was appointed in October 2018, and he has announced a strategic review and repositioning the company for growth in the offshore wind market. As you saw earlier, Tekmar has these various segments to the business, which he is attempting to integrate better. So there are restructuring costs. And these are the forecasts. Now, Tekmar are changing their year end. So up until 2020, it was 31st of March year end. Henceforth, it's going to be 30th September. So there's an 18-month year coming up, which means we're going to have to wait quite a long time for updates. The next update is the 30th of June, period ending 30th of June, sorry. And you'll see these are the forecasts from Stockopedia, and I think that Tekmar is very poorly covered by analysts, and I think they're falling behind. So in their analysis, so they're forecasting 2022 revenues of 42 million, But this is a growing market which is coming back rapidly, particularly as governments around the world are prioritizing clean energy. You'll have seen that yesterday China and the US agreed new carbon targets, or certainly messaging about reducing carbon dioxide levels, emissions. This is a growing industry, and I can't see why the revenue shouldn't be returning to at least 21 levels, and hopefully more than that. Okay, so moving on to the positives. I'm exposed to a growing offshore wind sector where it seems to have a decent competitive position with new products, and new products being designed for the floating wind farm segment. The shares are depressed. They're still 60% down from February 2020 levels, despite a recovery in certainly the core in the oil markets, and also the wind farm sector continues to grow. So I can't see why the revenue shouldn't return to at least previous levels. It's winning contracts around the world, as evidenced by its Twitter feed and its latest announcement of another Chinese contract win. It's got a new CEO who is restructuring and focusing the business, and it has no debt. Okay, negatives. Well, I'm concerned that the share prices are so depressed, given all the positive news positive aspects of this story. Has it lost the trust of the market after these two profit warnings last year? Schroders, I notice, are selling down. And actually, if you look at the RNSs, there are a number showing big holders reducing their stakes, and the commentary you read from them is fears of margin erosion. They also have high trade debtors, so they basically provide these cable protection systems up front and then are paid in arrears. There are also worries about competition, but I think we've had a look at that, and I think those fears may be overdone. There's certainly very low analyst coverage. You find I've gone onto Research Tree, and there's nothing, frankly, apart from small pieces of coverage in morning briefings where they cover a lot of companies. There are no specific analyst coverage of Tekmar itself, and that's from Research Tree. Generally has small brokers covering small companies, and there's nothing. And the other thing is there's change in the year end. So overall, I am very positive about this company. I think it's neglected. We covered it before. It's in a growing sector. It's got no debt. It seems to have a decent competitive position, and the shares are really depressed. And I think if the markets recover to where they were before, and frankly, they're growing markets, I think they'll recover to where they were before and beyond, then you would hope that the Tekmar share price would recover to at least where it was in February last year, and that implies 150% return. Now, I bought some previously in January when we initially covered the stock, and since then the shares have drifted down, and I've since actually bought some more. So, Richard, your thoughts?
Yeah, thank you very much, Keith, for that well-researched, interesting review. If you assume that they get back to the sort of profitability they were showing a couple of years ago, admittedly their market was slightly different than it did, but if they get back to that level of profitability, then they're on a prospective price earnings ratio of like somewhere between 2 and 3. And obviously the question of margin contraction is an important one, but you've done some competitor analysis which suggests that they're not really particularly bothered by competitors, and margin contraction only really occurs when you're in a highly competitive situation, which they appear not to be. So whilst it might be a concern, the reality may not be the same. And if the reality isn't the same and there isn't any margin contraction, then they will be on a very low price earnings ratio when they clear the restructuring costs and the profit warnings that they've issued. So it may be that it takes a little bit longer, assuming that they're on the right path. It may be that it takes a little bit longer before the market starts to develop a bit of trust in what's going on, some interim results to demonstrate the level of profitability and that the work that they're getting does give them a decent margin. But I think, on the risk-reward basis, they are on such a low multiple that the price is reasonably unlikely to go much lower. And if their business expands along with the growth in offshore wind power, and they maintain their margins, which we just discussed, then you could see that it could be, over the course of the next few years, a very profitable investment. And I like the company, and I like the review you've done on it.
Great. Thank you, Richard. The other thing is, we've seen clean technology companies go through the roof, frankly. Yeah. And this is a clean technology company, although, let's face it, it's really quite marginal, its business. And, these cable protection systems and anti-scam matting, they are not a big part of an offshore wind farm. You need to...
There are a couple of things I guess. One is, the old adage, don't invest in the miner, invest in the maker of the picks and the shovels. Well, This is a picks and shovels. It's not a generator. People have been investing in Drax on the basis that it's clean energy when we know it's not.
Yeah.
The other thing is, if the chief executive is on the ball, then one would assume there is actually considerable scope to expand the parameters of their operations so that they can move into other areas, or they can vertically integrate or horizontally integrate, both ways, profitably, if he's on the ball and doesn't just buy a hodgepodge of companies.
Well, he certainly has. They've been picking up these small engineering businesses and combining them into this conglomerate, which can now offer a host of services. And the balance sheet seems pretty strong. Net cash. So they hopefully should be able to continue doing that.
And in a very rapidly growing sector, there's no reason why they shouldn't be able to grow the business organically and also by accretion of other small businesses. So I'm with you, Keith. I don't really understand why the market doesn't like it, but it is a little bit like give a dog a bad name, and it takes a long time to shake it off.
No, I agree with that. I mean, because honestly, Richard, I'm slightly mystified by the very poor performance, given that all the positives there are. Now, it could well be we're missing something and that somebody knows something. As I noticed, I actually bought a decent amount this morning, and there certainly was a seller. So,
And it may be that as I said earlier, maybe we have to wait for interim results to confirm what we believe is the case.
Yes, absolutely. But I like this company, and when we are going to do a review of all the companies we have covered in Share Talk later in the week, and because they're now the best part of 30, so we thought we'd just run through them all. And this is one of the ones I like the most, actually. I really like this, and so it's a poor performance is puzzling.
Yeah.
Anyway. Okay, well, I hope you all enjoyed that, and I hope you'll press like and subscribe to our channel. And in the meantime, it's goodbye from Richard Wheater.
And it's goodbye from Keith Jordan.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only, and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website, or to any information, products, services, or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.